This is one of those composite problems which tend to cover all the elements, well, almost all. Looking back, it appears that these types of problems typically deal with a two-event situation. One, the acquisition of assets or business. If the consideration paid for the acquisition is greater than the book value of the assets acquired, then we are to assume that the excess price paid was for the goodwill attached to the business, something that is expected to benefit the business. This intangible quality is then accounted as an asset. The second event being the discharge or satisfaction of that consideration. This could lead to a capital profit if the debentures are issued at a premium. The capital profit is linked to the issue of debentures and is always accounted as securities premium reserve account. On the other hand, if the discharge of the consideration is through debentures issued at a discount, this results in a capital loss suffered by the company. This is accounted as discount on issue of debentures and will be written off eventually. But then, debentures can also be issued at par, in which case there is no capital gain or no capital loss. All three situations are dealt with in this problem. What we need to remember is that goodwill and capital reserve, of which we shall see in the next problem, may result in the acquisition stage, whereas discount on issue of debentures and securities premium reserve account can result only in the discharge stage. The agreed consideration is rupees 3,80,000. The value of the net assets booked rupees 3,50,000. That is, assets 4 lakhs minus liabilities assumed rupees 50,000. The excess, that is, the balancing figure, is accounted as goodwill in the acquisition stage. The journal entry to record the acquisition is asset account debit, goodwill account debit,
liability account credit, vendor account credit.
In the discharge stage, we examine all three situations of issue. Issue at par, issue at premium, and issue at discount. First, when the discharge of consideration is through debentures issued at par, the purchase consideration is divided by the debenture issue price, which is the face value of the debentures, and that is rupees 100. 3,800 debentures are issued at par to settle the consideration of rupees 3,80,000. There is no capital gain, no capital loss. The journal entry reads as vendor account debit to debenture account credit. In this next scenario, we now examine the situation where the discharge of the consideration is through the issue of debentures issued at a discount of 10%. The consideration of rupees 3,80,000 divided by rupees 90 being the issue price after the discount of 10% results in 4,222.2 debentures. 4,222 debentures is then issued and accounted as 4,22,200. Obviously, fractions of a debenture cannot be issued. This is then refunded in cash. The excess of the debentures issued over the consideration is accounted as discount on issue of debentures. That is a balancing figure. The journal entry reads as vendor account debit, discount on issue of debenture account debit to debentures account credit to bank account credit. To continue, we now examine the situation where the discharge of the consideration is through the issue of debentures issued at a premium of 10%. The consideration of rupees 3,80,000 divided by rupees 110 being the issue price, which includes the premium of 10%, results in
3,454.6 debentures.
3,454 debentures are then issued and accounted as 3,45,400. Obviously, the fraction of 0.6 of a debenture cannot be issued. This is then refunded in cash. It is to be noted that debentures of a nominal value totaling to an amount less than the consideration is issued in full settlement thereof. The consideration or obligation is greater than the debentures issued in full satisfaction thereof. This excess is a capital profit and is accounted as securities premium reserve account, which is also the balancing figure. The journal entry reads as vendor account debit to debenture account credit to securities premium reserve account credit to bank account being the refund of the fraction figure.